Today, we're diving headfirst into the world of cryptocurrency. Whether you're totally new to this or you've been hearing about Bitcoin and Ethereum for years but never took the leap, this video is your step-by-step guide to buying your first cryptocurrency. We'll break down the entire process in a way that's easy to understand, even if you're a complete beginner. So grab your notepads, buckle up, and let's get you started on your crypto journey. Okay, so before you even think about buying your first fraction of Bitcoin or any other cryptocurrency, we need to lay down some groundwork. First things first, what exactly cryptocurrency? In the simplest terms, it's digital money. Think of it like a virtual token that exists entirely online. But here's where it gets interesting. Cryptocurrencies use something called blockchain technology. Now I know that might sound intimidating, but just think of it as a super secure and transparent digital ledger that tracks every single transaction. This makes it nearly impossible to counterfeit or double spend cryptocurrencies. Now, while this all sounds pretty amazing, and it can be, we need to talk about the elephant in the room: volatility. Cryptocurrencies are notorious for their price swings. I'm talking about massive spikes and dips that can happen in the blink of an eye. Seriously, you could wake up one morning and your investment could be up 20%, and then by lunchtime it's down 15%. It's a wild ride and you need to be prepared for it. And finally, we can't ignore the risks. Just like with any investment, there's always a chance you could lose money. But with crypto, there are some unique risks to be aware of. We're talking about cybersecurity threats, scams, and the potential for technical glitches. It's crucial to do your research, choose reputable platforms, and never invest more than you can afford to lose. Alright, so you're still with me, which means you're serious about dipping your toes into the crypto waters. That's awesome. Now, let's talk about where you're actually going to buy this digital gold. Enter cryptocurrency exchanges. These are online platforms that act as marketplaces where you can buy, sell, and trade all sorts of cryptocurrencies. Think of them like the stock market, but for Bitcoin, Ethereum, and hundreds of other digital assets. Now, there are two main types of exchanges: centralized and decentralized. Centralized exchanges, or CEX, are like the big banks of the crypto world. We're talking about companies like Coinbase, Binance, Kraken, and Crypto.com. These platforms are generally user-friendly, especially for beginners. They offer high liquidity, meaning there are always plenty of buyers and sellers, so you can easily get in and out of trades. Plus, they usually have decent customer support if you ever run into any issues. On the flip side, we have decentralized exchanges, or DEX. These are more like peer-to-peer marketplaces where you're directly trading with other users without a central authority in the middle. Popular DEX include Uniswap and PancakeSwap. The main draw of DEX is that they offer more privacy and control over your funds since you're not relying on a third party. However, they can be a bit more complex to use, especially for beginners, and they might not have the same level of liquidity as CEX. So, how do you choose the right exchange for you? Well, it comes down to a few key factors: reputation, supported cryptocurrencies, fees, and security. Alright, so you've chosen the cryptocurrency exchange that's right for you. Now, it's time to create your account and get verified. Don't worry, this is usually a pretty straightforward process. Just head over to the exchange's website or download their app, and look for a button that says something like Sign Up or Create Account. You'll typically need to provide an email address, create a strong password, and agree to their terms of service. Now, here's where things get a little more official: verification. Most reputable exchanges, especially the centralized ones, will require you to complete a Know Your Customer (KYC) process. This is basically just a fancy way of saying they need to verify your identity. Don't worry, it's all above board and designed to prevent fraud and money laundering. You'll typically need to provide some personal information like your full name, address. Okay, so you've got your account set up, you're verified, and you're ready to start buying some crypto. But first, you're going to need some funds to actually make those purchases. The good news is that most exchanges make it pretty easy to deposit money into your account. One of the most common methods is through a bank transfer. You'll typically need to link your bank account to your exchange account, which usually involves providing your account and routing numbers. Once that's done, you can initiate a transfer directly from the exchange's platform. Bank transfers are generally considered one of the most secure and cost-effective ways to fund your account, but they can sometimes take a little longer than other methods. If you're looking for speed and convenience, you can usually also fund your account with a credit or debit card. This is often the fastest way to get started, but keep in mind that some exchanges might charge higher fees for card deposits. Plus, some credit card companies might treat crypto purchases as cash advances, which can come with hefty fees and interest rates. And finally, if you're already holding cryptocurrency in another wallet or exchange, you can usually transfer those funds to your new exchange account. This is typically a pretty straightforward process, but make sure you double-check the deposit address and any associated fees before you hit that confirm button. Chapter 5. Alright, it's time for the moment you've been waiting for. Buying your first cryptocurrency. The process is pretty similar across most exchanges, so don't worry too much about which platform you chose. First things first, you need to decide which cryptocurrency you want to buy. There are thousands of them out there, each with its own unique features, risks, and potential rewards. If you're just starting out, I always recommend sticking with the more established cryptocurrencies like Bitcoin or Ethereum. These are generally considered to be less volatile than some of the smaller, newer coins, and they have a longer track record. Once you've chosen your cryptocurrency, you need to find the right trading pair. This just means finding the currency you want to buy it with. For example, if you're looking to buy Bitcoin with US dollars, you'd look for the BTC-USD trading pair. Now, it's time to place your order. There are two main types of orders you can place: market orders and limit orders. A market order is the simplest type of order. You're basically telling the exchange to buy or sell your chosen cryptocurrency at the best available market price. This is the fastest way to fill your order, but you might not get the exact price you were hoping for, especially if the market is moving quickly. If you're more price sensitive, you can place a limit order. This type of order allows you to set a specific price at which you're willing to buy or sell. Your order will only be filled if the market reaches your chosen price. Chapter 6. Congratulations, you've officially joined the world of cryptocurrency, but hold on, your journey isn't over yet. Now that you own some precious digital assets, you need to keep them safe and sound. This is where cryptocurrency wallets come into play. Think of them like digital vaults for your crypto. There are two main types of wallets: hot wallets and cold wallets. Hot wallets are convenient for frequent transactions but more vulnerable to theft. Examples include exchange wallets and mobile wallets like MetaMask and Trust Wallet. Cold wallets are offline and more secure, like hardware wallets and paper wallets. Choose a hot wallet for active trading or a cold wallet for long-term storage. Chapter 7. You've bought your crypto, you've secured it in a wallet, and now you're ready to sit back and watch your investment grow, right? Well, not so fast. The world of cryptocurrency is constantly evolving, and to be a successful investor, you need to stay informed and be prepared to adapt to changing market conditions. One of the best ways to keep track of your investments is to use a portfolio tracker. These handy tools allow you to monitor the value of your crypto holdings across multiple exchanges and wallets all in one place. Some popular portfolio trackers include CoinGecko and CoinMarketCap. Another important aspect of managing your crypto portfolio is diversification. Just like with traditional investments, you don't want to put all your eggs in one basket. Instead, consider spreading your risk by investing in a mix of different cryptocurrencies. This could include a combination of established coins like Bitcoin and Ethereum, as well as some smaller, potentially higher growth altcoins. But remember, diversification isn't just about buying a bunch of random coins, it's about doing your research and choosing assets that align with your investment goals and risk tolerance. And finally, the most important tip I can give you is to stay informed. The cryptocurrency market is constantly evolving, with new projects, regulations, and trends emerging all the time. Make it a habit to stay up to date on the latest news and developments by following reputable cryptocurrency news sources, listening to podcasts, and joining online communities. And there you have it! You're now well on your way to becoming a crypto pro. Remember, investing in cryptocurrency can be a wild ride, but by following the steps we've covered today, you'll be well equipped to navigate the market with confidence. From choosing the right exchange to securing your investments and staying informed, you've got the knowledge you need to make smart decisions. Don't forget to like this video if you found it helpful. Subscribe to the channel for more crypto tips and tricks, and hit that notification bell so you never miss an update. Until next time, happy investing.